Hello A2 students. In our last lecture we studied the basics for making club accounting, and the last topic we studied was treatment of lump sum membership. So in this class, in this lecture, we'll be studying about how to treat large donations, and we'll also see an example how to prepare full financial statements of the club. So let us begin. So here we have the heading treatment of large donation or legacy received for specific purpose. So if we receive a large donation or a legacy for specific purpose, how should we treat it? That's the question. So when you receive a large donation or a legacy, you're supposed to open up a special bank account which should be debited, and a special trust fund should be credited. Let us look at an example to understand this statement. So this example is extracted from a book. On 1st Jan 2014, Stumps Cricket Club received a donation of $50,000 to build a new pavilion. So to build a pavilion is a specific purpose, and the donation received is 50,000. So we have received donation for specific purpose, so here we need to increase the bank balance. So that's what's going to happen out here. Here bank account is being increased, bank account debit, and then credit the specific fund account, or you can say special trust fund. So the specific fund account is pavilion fund account. So bank account debit, pavilion fund account credit, 50,000. The bank account has been increased by 50,000, and here I have used the term pavilion in bank account so that the money received for pavilion is supposed to be used only for pavilion and no other purpose. That's the reason why we have written pavilion here. So it's assumed that in the bank we have opened up a separate account under the name of pavilion. So at the same time we need to increase the pavilion fund account. So we're going to have a different separate list out here this way. Here in the credit side, the pavilion fund is increased by 3,000. You write bank. I think you know how to post this. So after this, what to do now? The second step what we do is the money received, the donation received 50,000 should be used only for building pavilion. So during the year, if there is any expenditures incurred to make the pavilion, it should be debited to the pavilion fund account. So here you can read the question. In August 2014, Chang, a builder, was paid $3,874 after laying the foundations. In September 2014, another building firm, Chow, was paid $4,751 for work done. So what has happened here is during the year, two firms have done the building work. They have built the pavilion. One has built worth 3,874 and other has built 4,751 worth of pavilion. So what we do is we add up the total expenditures and then we debit to pavilion fund. So in step 2, you add this 2. When you add this 2, you get an amount 8625. That's the total amount. So that you show it as an income in the income and expenditure account. So you need to write your income and expenditure account. This indicates that in the income and expenditure account, the portion of annual expenditure will be shown as donation income. So that's it. So after this, what we do is we total up both sides. When you total up, you get 50,000, or it should be 50,000 here. That's a mistake out here, print mistake. That's 50,000 out here total. So you have total 50,000. The balancing figure is your step 4. You get your balancing figure as step 4. Balance CD 41375, 41,375. That becomes BD at the beginning of next year. Now this should be shown in your income statement and your statement of financial position as this way. So in the income statement, we will show the total expenditure incurred during the year as your income. So donation income is 625 pavilion, and the balance amount will be shown under the heading of non-current liabilities in your statement of financial position, and then we'll write here pavilion fund 41375. So this is exactly similar to our life membership uh, subscription received. So like in our previous class, if you realize the way we had treated life membership fees, or you can say life membership subscription, is the same thing out here. So basically what you need to understand here is, if you receive donation for specific purpose or a legacy for specific purpose, you need to open up a special fund like here pavilion fund, and then whatever expenditures incurred during the year should be shown as an income in the income and expenditure account, and the remaining amount, the balancing figure, should be shown under the heading of non-current liabilities as under the specific name. Here is pavilion fund and put the amount 41375. So that's how you treat donation for specific purpose. So there are still more entries to be passed out. So the question has asked us to prepare necessary accounts, so we need to make other accounts as well. Other accounts are the accounts where we show payable to Chang and Chow, and then we make payment to Chang and Chow, and then the pavilion is being built. So here we need to show the pavilion being built, payable being recorded to Chang and Chow, and then payment being made to Chang and Chow. So let's have a look. So these are simple ledgers. So now we have pavilion account, bank account, Chang, Chow, and then statement of financial position. So during the year, Chang and Chow has built certain portion of the pavilion, so we need to increase the pavilion's value by this total amount. So in step 1, we write pavilion account debit, Chang account credit. So here it's showing that Chang has built 3,874 worth of pavilion. So pavilion is our non-current asset. This is increased by 3,874, and at the same time we are showing payable to Chang. It is assumed that we are not paying on the spot. So here this is a payable entry, so it goes in the Chang's ledger as well. Here in the Chang's ledger on the credit side, 3874 is shown as a payable. Then in September, again another firm, Chow, has made 4,751 worth of pavilion. So pavilion account has been increased by that portion, and at the same time we need to show Chow a payable of 4751. So you go to Chow's account, and in the credit side you have pavilion account 4751 payable to Chow. That's it. In the bank account, there's a fund of 50,000 that had been raised, that has been received as a donation. You can see here debit side. So now at the end of the year we are going to make payment to Chang and Chow. So Chang is supposed to be 3874. So to make payment you write bank here. So Chang on the bank credit is paid. So when you pay out here, the bank balance is going to be reduced by the same amount here, 3874. You write Chang. The same way we make payment to Chow, 3874. Oh, this should be 4751. It's a print mistake. So this should be 4751. So here we are making payment to Chow as well, 4751. Now at the same time we'll have to reduce the bank balance by the same amount, so 4751 that way. So now Chang and Chow's account ledgers are closed because there is no payable anymore. So now in the bank account we need to balance it as well. So first we add our total, 50,000 here, 50,000 here. The difference 10 is your balance CD, that becomes BD at the beginning of next year. So we have a bank balance of 41,375. So in the statement of financial position, what we need to do is, the pavilion fund is shown as 41,375 under non-current liabilities, which we had done earlier. Now here one more step, we need to increase the value of non-current asset. That's your pavilion. has been increased by 8625. That's the sum of 3874 plus 4751. This statement of final position indicates that we have made a pavilion worth 8625 and we still have fund of 41,375 that has to be converted to non-current asset pavilion. So that's how you understand your donation received for special purpose. Now, so let's prepare financial statement for clubs. Let's prepare the full financial statement. So simple steps we learned was step 1, we need to prepare opening statement of affairs to calculate the opening accumulated fund. Step 2, you need to compile the receipt and payment and summarize bank account. Generally this is given in question. Step 3, you need to construct adjustment accounts. This consumes a bit more time and you need to be careful while preparing these ledgers. Step 4, finally we prepare the financial statements. That's your income and expenditure account and statement of financial position. So let us move forward. So this question is from your book. It's an example from a book. You can have a look at your book as well. So the following receipt and payment account for the year ended 31 October 2014 has been prepared by the treasurer of Dantong Gardening Club. So you have a receipt and payment out here. The left side, on the left hand side, this is your receipt. You have receipts on the left hand side, RECEIPT. So receipt on the left hand side, and then you have payments on the right hand side. So this is your receipt and payment. This is the format. Now in the left hand side you have your bank balance at the beginning. So initially we had a bank balance of 146 and these are all receipts. So sales, seed sales, we have received 612. Subscription received, there's show entry fees, annual dinner dance ticket sales, equipment hire. So these are receipts. So total receipt we have 8794. Out of that, these are the payments made. The payment is made. So payment made to seed supplier, purchase of gardening equipment, meeting room rent, secretary's honorarium, speakers expenses, bank charges, advertising, insurance, postage and telephone, dinner dance expenses, printing, so expenses. That's your expenses. These are all expenses, and at the end you have your bank balance. That's your balance remaining. So total 8794 less all these expenses. If you deduct, you get 1414 as your closing balance. This is your receipt and payment. So now you have additional information down here. You have your opening balance and closing balance for each of these headings. There's equipment and valuation, amounts owed for seed purchase, amount owed for printing for dinner dance, prepayment of insurance, subscription paid in advance, subscription owing at financial year end. So these are your opening and closing data. Now what we need to do is we need to focus on the steps, and the first step was to prepare opening statement of affairs. Now if you ask why do we need to prepare this, it's to calculate the opening accumulated fund. Opening accumulated fund means opening capital out here. So it's basically preparing your statement of financial position at the beginning of the year. So at the beginning of the year we need to prepare the statement of financial position. So this is the answer. I'm going to explain how this has been prepared. So here what we do basically is to calculate your accumulated opening accumulated fund. What we do is we simply use the accounting equation, assets equals to capital plus liabilities. You need to remember this accounting equation. So here we are trying to find the value of capital. So the value of capital is A minus L. So here we are going to add the total assets, and then we are going to add up the total liabilities. You can see your total asset is this, total liability is 550. If you subtract it, you get your accumulated fund. That's your opening accumulated fund, because we are going to use all the opening data. So you need to look at all the opening data, go to the additional information. These are your opening data, so you don't need to take the closing data. Since we are making the statement of financial position at the start of the year, simply take the opening values. You need to take all these values, plus you also need to take the cash balance at the beginning. Cash balance at the beginning is your opening balance. So you have here's your opening cash balance 146. So using this data you need to prepare it. So let's have a look from step by step. So first thing, equipment at valuation. Equipments are our assets. So your opening 840 is our asset, so it goes up here as asset. You all need to figure out is here whether it's an asset or liability. So amount owed for seat purchase. Amount owed for seat purchase means we have purchased seat and there is payable amount. So this 128 is your liability. It comes under the liability section. Here you can see here. Then you have 62. 62 is amount owed for dinner. Amount owed for printing for dinner dance. So we have an activity which named dinner dance. Probably you have a dinner as well as dance going on. So for that maybe you need to print some pamphlets or some invitation cards. So amount for printing is we need to pay the printing supplier 62. So that's also payable. Payable comes here, liabilities. Then you have 112 as prepayment for insurance. So prepayment for insurance is your prepaid insurance. Prepaid insurance are prepaid expenses. Prepaid expenses are asset for the business. So 112 goes in the asset as your asset, as your current asset. Then 360 subscription paid in advance. So subscription paid in advance, here what you need to understand is subscriptions are income for the club. We are the accountant of the club. So subscription paid in advance means we are not paying it, we are receiving it. We are the accountant. So the members are paying in advance. If the members pay in advance, it becomes an advance income for us. And advance incomes are always liability for us. So advance income of 360 becomes your liability. Here is your 360 that way. Then we go to 180. That's 180 is your subscription owing at the financial year end. Subscription owing at the financial year end means at the end of the year we have 180 receivable. So 180 receivable becomes our current asset. So it goes up here 180. And finally 146 is the bank balance at the beginning. You need to put that as well here. So you add this up, it comes to 1278, and then you deduct 550, you get 728 as the accumulated fund. That's your opening capital, or you can say opening accumulated fund. So that's your step 1 complete. So now step 2, we need to compile the receipt and payment account and a summarized bank account. Now generally this will be given in the question. So here you already have receipt and payment given to us in the question. So since receipt and payment is already given, you don't need to worry about making it. So we move forward. So the third step was to prepare adjustment accounts. So to prepare adjustment accounts, what you need to understand is you need to go down here and there is a list of all these ledgers with opening and closing balance. You need to understand that you have to prepare adjustment accounts for all these ledgers because there is something missing out here. So let's do it step by step. So first one, we are going to do equipment valuation. Equipment valuation, we are going to this one, step 1, equipment valuation. So this is what we are going to do, equipment valuation. So I'm going to mark this as 1. We'll be doing working note number 1. So equipment is our asset. We have opening balance here in the asset 840 BD. Now 3000 is a closing balance, so it goes here at the end of the year. CD becomes BD at the beginning of next year. So I hope you are familiar with this. Then now we need to go up and see the question up here. This is your receipt side, this is your payment side. In the receipt side there is nothing to do with equipment, though there is out here equipment hire 420. Now you might be tempted to put in this ledger, but this equipment hire is different from equipment valuation. Equipment hire here refers to, or its meaning is, we have given our equipment on hire to outsiders and then receive 420. So this has no relevance with this equipment. This is your asset ledger. So you go to the credit side. In the credit side you have payment to seat suppliers, purchase of gardening equipment. Here there is a purchase. So when you purchase gardening equipment, it means your equipment has increased. So here in the debit side, increase is recorded. Equipment account debit, bank account credit, this way. And then you add this up, it comes to 3682. This side also 3682. The balance or the missing figure here is your depreciation. So this is your depreciation, the missing figure. and then you need to charge this in income and expenditure account. So I/E refers to income and expenditure account, so we'll be showing in the income and expenditure account. This one. So in the income and expenditure account, you will be showing it at this way. So this is the income and expenditure account, which will be making after all this adjustment account has been prepared. So if you look at 682 right down here, here's a depreciation of equipment 682. That's where we need to put this. So this is the reason why we are making this equipment account. So at the same time, you also need to understand that this balance BD is our non-current asset. So you will have to show it in the balance sheet or the statement of financial position. So here's the heading non-current asset, equipment at valuation 3000. See, the closing balance has come here. So make sure you know where to keep this later on. So now we make the next ledger. That's your second ledger. The second ledger is amount owed for seed purchase. So let's say amount owed for seed purchase, you write seed account, and then owed means payable, so it's a liability. 128 comes in your credit side, 128 is here in the credit side. So obviously 84 will come in the closing balance, will come in the debit side. You have CD, that becomes your BD, you have your total, so you don't have to worry with that. Now we look up in the quotient to find out information related to seed. So up here, first we go on the receipt side, seed sales. So this is related. I'm going to mark this as 2, and I'm going to mark this as well as 2. So you have seed sales 612. So we have received 612 by selling seeds. You go down further, there is nothing to do with seeds. Go to your payment side, payment to seed supplier. So this is also related. You put 2 out here. So anything down here further to do with seeds. So there's nothing to do with seeds. So now we need to record this. So seed sales, you don't need to put in the ledger. Payment to seed suppliers, that we need to do it because we are buying seeds. So when you buy seeds, seeds increases, seeds account debit, bank account credit 407. We are assuming that all payments are made through bank. So this comes here, and then the balancing figure becomes your purchase. You need to write income and expenditure. This is your balancing figure as a missing figure 363. Now what we do after this is we present it in the income statement. So in the income and expenditure account, you see this profit on seed sales is 249. Here we have shown the sales as 612. 612 is up here. Less purchase 360. This is the purchase 360 here, and then 249. Now your question might be, why did we not put this seed sales in the ledger? The simple answer is, in the club accounting, when you have different activities being conducted, you need to show the profit or loss made from the concerned activity, so that you can make decision in the future whether to continue or not to continue. So due to that concept, here we are showing the profit portion. We are also showing what is the selling price and what is the cost of sales as your purchase. So basically this 360 is your cost of sales, so you can say purchase. So that's why we have not put 612 out here, to make it clear out here. So now in the statement of financial position, this 84 will go as your current liability. Remember, that's a payable. So if you see down here, current liabilities, you have payables with 84. That's how it's going to be presented. So I have a feeling you understood this as well. So now next one, the next ledger is our amount owed for printing dinner dance. So for this amount owed for printing dance, let's mark this first. I'll mark this number 3. So let's find out all the data related to printing and dinner dance. So if you look up here, there is annual dinner dance ticket. So let's mark this 3. This is number 3. Then you go down here, up, down here, down here, down here. There's dinner dance expenses. Put your 3. Printing for dinner dance 3. I think that's it here. So this is all related to the activity dinner dance. So this is a fresh activity. So now we need to make laser for this as well. So this is our laser, and then we are making laser for just the printing portion, because printing has been done from outside suppliers. So in the beginning we have a payable amount of 62. See, amount owed means payable, so you have 62 payable. So if payable is 62 BD out here, CD comes this side 75, CD becomes BD down here. Then up here you need to record only those activity related to printing, because printing is done from external service provider. So look up here, and then here is your printing for dinner dance 128. So that has been paid. So in the debit side, printing bank, you put 128, and then you find the missing figure, and that's the expenses for printing 141 is the printing expenses for the particular period. So now how to present this in the income statement? So in this income statement, what we do is here's your printing. Where is printing? Yeah, profit on dinner dance. So this has been the printing is part of your dinner dance, so we are calculating profit on dinner dance. So what has been done here is the total receipt from dinner dance is 2250. You can look up here, 2250. So less expenses, there's dinner dance expenses of 174. We are trying to calculate whether it's profitable or it's going at a loss. So from this you subtract it. This is your receipt, this is your expenses, less you also need to subtract the printing expenses. Printing expenses are also part of the dinner dance expenses. So when you subtract this, you get profit. So since this is also a different activity, we are showing whether this event is profitable or not, and here it's profitable. So that's how this data has been presented. So now again you have a closing balance as payable out here. So this needs to be showed in the statement of financial position as a liability. Down here you have printing 75. So that's how it is presented. So we go to next laser. So that's your insurance down here. Prepayment for insurance. Prepayment means your assets. Prepaid expenses are assets. So 112 comes in your debit side, BD here 112. So in the credit side we have 206, CDBD. That's simple. So we go up here and then we search for information related to insurance. In the receipt side there is nothing. You go to payment side, you will have your insurance out here. So I'm going to mark this as number 4. So insurance paid. Paid is bank. So insurance paid is your expenses. In your debit side you have bank 348. So you add this, you get 460, and then you deduct this, you get your missing figure as expenses for the concerned period. So now how do we present this in the income statement? So in the income statement you need to show as an expenses insurance 254. Very simple. So there is no anything, no receipts related to it, so simply it's shown in the expenses heading. So insurance means insurance premium paid for the club. So now this balance BD you have, the balance BD is your in the debit side, so it's a current asset. So in the balance sheet you will have to show it as current asset. Here under the heading of current asset you have insurance 206. Make sure you understand this. So after this laser is also complete. Finally we go to subscription. Now we need to figure out the items related to subscription. So in subscription I'm going to mark this as number 5. This is 5. You also have subscription down here. This is 5. You go up here, subscription, you see there is 5 this way. So we are going to make laser for this. Oh, I missed that one. So that's your 5, and then 5. So subscription is income for us. So in the beginning, let's have a look at individual data. What is this 360? Subscription paid in advance. Subscription paid in advance means subscription received in advance. So advance income for us is a liability. Liability means in your ledger this will be shown as a liability. Here is a step 1, 360 is a liability. Now if 360 comes this side, obviously 135 will come in your debit side. So that's a step to 135. If CD will become BD at the beginning of next year. So we have done the first part. Now second, subscription owing at the financial year end means subscription receivable. That's your income receivable is your asset. So in the debit side it will come as 180 up here, 180. So if 180 comes here, your closing balance 225 will come in the other side. That's here, 225 you can see here. So 225 CD becomes BD at the beginning of next year. That's how we do it. Now after that you go up here, this number 5, subscription receive. Subscription receive means we are receiving it. So obviously bank on debit, bank increases. Bank on debit means subscription account credit. So here we'll have cash 5046. We can have bank as well. So 5040, and then we add up the total. This is your total. You add up total. This is your total, and then the missing figure is shown as income in the income and expenditure account. So that's a missing figure 5310. So let's see how this is presented. So in the income statement, income and expenditure account, you have subscription 5310. So only the missing figure you're going to show as income. It means you cannot show whole of 5040 as income. That's how it's done. Then you also need to understand that's not it. Okay. So you also need to understand way to present this 225 and 135. So 225 is your asset. This is your asset. So asset is going to come here. You can see here. Current asset receivable 225, and this 135 is your advance income. That's your liability. It's going to come here under current liabilities, advance subscription. That's in your statement of financial position. So that's how we do subscription. So finally, now we are ready to make our financial statements. So financial statements, you have the income statement here and statement of financial position. So the question is, which do you want to make? So first thing, we need to make income statement. So this is your income statement. This is the income statement, and then this is your statement of financial position, which I have been showing frequently. So let us go how to make our income statement now. So in order to make your income statement, what you do is make sure you don't miss out anything. So finally we are ready for it. Let's have a look. So this is the final part of solving it. So far we learned how to make a statement of affairs, opening statement of affairs to calculate accumulated fund. Then we learned that receipt and payment is already given the question, and the step 3 we made all the adjustment accounts given out here. So in the beginning when you are solving, now we are going to summarize the whole answer. So how you are supposed to do is, first you read the additional information this way down here. Go to the additional information and mark it. Like I'm going to mark this 1. See, I mark this 1. So 1. If I mark this 1, all the relevant data you make sure you mark it 1. Like here, purchase of garden equipment is 1. Make sure you mark it. Then I go to number 2. Amount owed for seed purchase. Mark all the relevant data related to seed purchase. So when I press 2 out here, it's going to be marked here 2. That's what I'm doing. Step 3, amount owed for printing for dinner dance. So these are event related to dinner dance and printing as well. So mark all the items related to printing and dinner dance. Printing is part of dinner dance. So you mark 3. Here is your 3, all the green colors. Payment for prepayment for insurance. Find out all the information related to insurance. So when you press 4, here's your insurance. And then find out all the information related to subscription. That's your number 5. It's here. That's 5. So now what you need to understand is, after making your statement of affairs to calculate opening accumulated fund, the step 2 is your adjustment accounts. So when you are making adjustment accounts, you need to focus on this additional information. Don't miss it out. Like for example, if you want to make one, we just learn how to make one was made equipment account. We made it this way using all the data related to one. That's what we did. So same way, when you have to make seed account, we looked at all the information related to number 2 and we made a seed account. Number 3, printing account. If you look down here, printing, we compile all the data related to number 3 and then made printing account. Same way we made insurance account, and same way we made the subscription account. Now to make your income statement, let's make an income statement now. Assuming that you have already made the ledgers, now we start solving. So in order to solve, you start from your left side. Let's start from left side. So what to do with the opening bank balance? This opening bank balance goes nowhere, so I'm going to cross it. It goes nowhere because when you are making your statement of financial position at the year end, we are concerned with the closing balance of the bank, so we will be using this data 1414. So this has no problem with us. So if I say that, if you look in your statement of financial position here, if you look in the statement of financial position here, sorry, where did I go? So if you look in your statement of financial position here, this 1414 amount, the closing bank balance will be shown out here as your current asset. Your bank balance 1414. So we don't need to focus on the first part, focus on the last balance. This will come as current asset out here. So that's your statement of financial position. Now second, seed sales. The seed sales. So what had we done with seed sales? Let's have a look at number 2. So seed sales was here and here. So this we had made the laser first this way, seed sales. Then we had presented this in the income statement. In the income statement we had shown 363 as an expense and then 612 as income. So if you look at the income statement, you can observe it. 612 is your receipt, 363 is your expenses, the purchase we have deducted. 363 was obtained from the laser, this laser, this way. So that's how we present it, that you understood. So seed sales done. Now subscription receive. Here we have subscription receive. So make the habit of marking what you have done. So let's mark this. So this goes no way, you understood. This has been done. Now subscription receive. So to calculate subscription receive, you calculate subscription number is 5. This is your 5. We had a done of working out the 5, and then this 5310 we have shown as income. This 225 as asset, 135 as your liability. So let's have a look one more time. 5310 as your income. So 5310 is your income. Here you can see in the statement of financial position, 225 is your current asset, 135 is your liability. So you can see down here 135 is your current liabilities, you can see here. So 225, if you want to see 225, you can see at the bank balance down here, subscription 225 current asset here, you can see that here. So that's how it has been done. So it means, again I'm going to mark. So subscription also done. Now show entry fees. Show entry fees. When you have any information, make sure you see that event. This is an event, whether the event has other expenses related to it. So if you look this side, you might come across one, and then I'm going to press this just to show it. Here this is show entry fees. These are relevant data. There's a show price, show expenses. So show entry fees means we have collected 326 from show, and then we have spent 247 for show price, and show expenses is 6. So now you need to calculate profit or loss. If you add this two, this is your 7, 8, 15, 4, 4, 8, 9, 2, 3. So 395. 395 is your total expenses, while 326 is your income, so it's going in a loss. It means you need to show in the expenses section of income statement. So in the income statement, if you see number 6 out here, here's the number 6, loss on show 69. How did this come? 326 is your, here is a 326, that's your income, less your expenses, less your expenses 395. 395 is the sum of 247 plus 148. So if you add this two up, you will get your expenses more. So it has come down. Had this been profit, you would have to show up in the income. That's what I have done out here. So number 6 is done. Everyone understood? So annual dinner dance ticket. So this was dinner dance ticket. Ticket was related to our number 3. So it was related to all these 3. So these 3 numbers here we have shown it. You can see your 3 is 2255. That's your 2250 is your receipt. 2250 minus 1874 is your dinner dance expenses, minus 141 is your printing expenses. This printing expenses had come from number 3 ledger. If you look at number 3 ledger, 141 was a printing expenses. There was a payable at the beginning, payable at the end, payment being made during the year, and then expenses for the year was 141. So this you understood. Now equipment hire. Equipment hire, there is no any other relevant information related to equipment hire. So equipment hire is our receipt. So you go to receipt here, equipment hire 420, that way. So basically what you have done here is we have completed all step by step. Make sure you go step by step. We have done all. So all this has been recorded without any miss. So that's your income side. Now we go to the expenses side. If you go to the expenses side, payment to seed supplier. Payment to seed suppliers was related to seed number 2. So this 2 and 2 were adjusted in our number 2 here, and then we had got 363. So this 363 we have shown out here. Profit on sales sale 249. So this is already done. It's already done with this step, so we don't need to do one more time. That's gone. Purchase of gardening equipment, this is already done. Purchase of gardening equipment has gone in your number 1, in your number 1 ledger, so that's done. Meeting room rent 750 expenses, so you put down here meeting room 750. Secretary's honorarium, that's also your expenses. This is expenses made for guest in the certain event. If you are conducting any event and invited a guest, expenses incurred for the guest is called a secretary's honorarium. So that's 100. Yes, 100. Yeah, here's 100. Then speakers expenses 240 has come here. Bank charges is 28 is here. You put it down here. Advertising 126 here it's come. Then you have next one, postage and telephone 142 is here. Dinner dances has been done in number 3. Printing for dinner dance is gone in number 3. Show price is gone. Show expense is also gone. So all these have been gone. And then depreciation for equipment, this had come from your number 1. So you don't have to worry about that. This also come from 1. So now we have recorded all the income and expenses. So you add up the income. Total income comes to 6214. Total expenses 2391. So if you subtract this minus this, you have a profit. That's called surplus. You can either write surplus or we can write excess of income over expenditure. So that's how you prepare your income and expenditure account. Now we go to the statement of financial position. In statement of financial position, you need to list the non-current asset first. So you have equipment here. Equipment is your closing balance 3000. You put it down here, or you can look at equipment later. That's the closing balance here 3000. That's the same thing. Then current assets, bank balance is your current asset. This 1414 becomes your current asset, comes here. Then there was insurance receivable. Insurance was in number, look at the insurance number 4. Is a receivable of 206. Closing balance comes here. It's always the closing balance. Subscription receivable 225. If you go down here, subscription receivable 225. So it has come here. Then you add this up, you get a total current asset. Add the both up, you get total assets. Then in capital and liabilities, first thing we put the accumulated fund. So accumulated fund opening balance 728. That's from your step 1. If you see your step 1 answer is 728. So you got this. Add surplus. That's from your income and statement. If you see your surplus is income. surplus, is that income? So you can see income is 3823, surplus 3823. So 3823 is 3823. Here's the 3823. So you add these two up, you get 4551 as your capital. And then current liabilities, you have seeds payable. You go up here, seeds payable is 84. Then you have printing payable, anything that's payable. Printing. Yeah, here's a payable. Printing 75, so the 75 has come here. Subscription received in advance, the current liabilities you have here. Subscription received in advance 135, so that's here. Add this up, you get 294. And then you add 4551 plus 294, you get 4845. That is the total capital and liabilities. This amount must be equivalent to your total assets, and that completes your statement of financial position. So this is basically how we prepare the club's financial statements. I want you to go through it one more time, and if you have questions you can ask me personally. So saying this, thank you and see you in my next class.